Hey traders, Raghi here, and in this free recap video I want to talk about a couple things regarding what's coming up towards the end of the month and how important this is going to be going forward. And this is something that's pretty key to what we do in the Simpler Futures room, and that is we look at the calendar for where the market's going to be making some big decisions about upcoming events. Now today was options expiration, and generally speaking it was a pretty bullish day. We have the bank holiday on Monday. That's the Martin Luther King Day. And then we have the rest of the week. And then we get into next week. Now when we get to about the 25th and 28th, what's going to happen is we're going to see a number of things start to get very close to major events, get very close to the end of the month. And the importance of this on the calendar is this. Take a look at this is a site that I use pretty regularly called Estimize, and we do this during earnings season. Now take a look at how stacked 28th, 29th, 30th, and the 31st are. Look at the names. These names should be very important to not just stock traders but futures traders, because these are all, with the exception of Visa, heavily weighted names in the broader index futures, really with the exception of Caterpillar and Visa, which are still top names, top 10 names, but not to the degree that, say, Intel, Apple, Boeing, McDonald's, Facebook, Microsoft are, right? And then, of course, how can we forget Amazon down here? So major weighted names coming up, all kicking off basically the 29th. So let's head back on over to that calendar. You can see here. So I think there's going to be a lot of interesting positioning happening between the 25th and the 28th. Okay. Then what else is happening? We have the FOMC right here, right? And now the even the non-quarterly, the non-March, June, September, December meetings are going to have, there may not be the projections included with those meetings, but they're all going to have press conferences. And this is the big press conference where the market's finally going to say, all right, Powell, informally you've been mentioning the word pause, and that's going to lead us to believe that you're no longer hiking rates without a clear signal from the FOMC. And look, we're not only saying you're not only going to no longer hike rates. The tightening cycle is done, right? That's what the market is communicating to the FOMC as far as what they're interpreting from recent informal, I emphasize informal communications. The rate statement hasn't changed. The press conference conversation hasn't changed. So that is something that on Wednesday, the 30th of January, the market is anticipating. And of course, we also have a 2-day meeting between the U.S. and China. And that's kind of what I want to talk a little bit about here today, here in this recap video. How does China play into this, and how do we gauge and trade China? So the news here, and this probably came out about 5-6 hours ago, China had already, during the previous meeting, kind of floated the idea of, and I'm going to sort of, make this super basic because that's really what it is. They kind of basically proposed a shopping spree of sorts. All right, they will just go ahead and go on basically a shopping spree for a period of 6 years to narrow, if not eliminate, the gap, the imports. So basically, here's how it would play out. I'm looking at my notes right now. $1 trillion to be spent over a period of 6 years to reduce the trade surplus, which was at 320 some odd billion last year, to zero. So 2019 plus 6, you're basically looking at 2024, the end of 2024, right? So that was the idea: a 6-year shopping spree, buying spree of U.S. imports to narrow that trade surplus, which has been a major talking point for these negotiations. All right. Now, first of all, the U.S. kind of was very skeptical, and here's the big thing. They said, no, you got to do it in 2 years. Well, it makes perfect sense why 2 years would be the cutoff. It has a little something to do with the 2020 elections, doesn't it? So that's going to be an interesting sticking point. No, instead of spending $1 trillion over 6 years, we basically want you to narrow that trade surplus, spend the trillion over 2 years. I don't know how likely that is, and these continue to be these sort of sticking points. But this news hit the airwaves, and the fact that the market felt this was pretty positive, you could see, play out in a couple of areas. So here's kind of the gist of where I'm getting at. So first of all, that's headline psychology, but it's hitting a very important pillar that's been keeping the market higher. One is U.S. trade talks, and two is the Powell put. When U.S.-China trade talks are at the heart of, say, the bullishness on any given day, I highly recommend checking out sectorspider.com and looking at which sectors are benefiting the most on a day like today. And I'm going to continue to say that when trade talks are at the heart of the bullishness, focus on XLE, energy, and focus on XLI. And both these are going to help the Dow. I think the Dow actually is poised to benefit probably the most. Even though tech is up, I would focus on those two sectors, looking for opportunities, really even to day trade these two sectors on days where China is the positive news, not the negative news. I mean, those two sectors will actually head lower, probably lead the way lower. But on good days, look for longs, and quite frankly, on days with negative China news, look for those two sectors. All right, so that's what's going on here as we go into next week, kind of a broader view, a few things that I've got on my mind between now and the end of the month. Think about the end of the month, gang. It's going to be probably the most important week for the quarter as we round out January. I'll see you in the next update.